Hello everyone, I hope that all is well. I just want us to quickly go through this section, which is learning unit number 7, taxes. As you know that in South Africa, our South African government generates revenue mostly in the form of taxes. So I'm just going to touch on those few types of taxes, not all of them, but the basic ones. We have got types of taxes here, the direct taxes and the indirect taxes. By the direct taxes, we mean those taxes which are deducted directly from our salaries or our incomes. If you've got a business, that will be called income tax. It will be deducted directly from the income or the net profit of the business. Okay, so you need to check whether you are dealing with the indirect tax or direct tax. What do we mean by say indirect tax? Normally the indirect tax are paid by everyone within the republic. For example, VAT. VAT is an indirect tax. Whether you're working or not, you will pay what? VAT. So in a nutshell, the direct taxes are directly charged on our incomes and as individuals. But if you're running a business, it will be charged on the net income of the business. The indirect taxes are those which are indirectly paid. So every citizen will pay for these taxes. Okay, for more information, please check the manual. So for individuals, normally every tax year, the new tables are availed. So it depends how much will you earn. So depending on your annual salary, remember this table represents the annual figures. So your annual figure, depending on your annual figure, will be taxed at a particular rate. For example, if you're earning between 0 and 195,850, you'll be taxed at 18%. But if you are earning between 195,551 and 305,850, can you see you're going to pay 35,253 plus 26% of the taxable income above 195,850. But I will clarify this with an example. Okay, so if you are earning 1.5 million, for example, you are gonna, can you see the last the second last category? You're gonna fall where there is 708,311 to 1,500. As you can see, the more you earn, the more tax you pay. We call this progressive tax. We use marginal rates. As you can see, it starts from 18%, 26%, 31%, 36%, 39%, 41%, 5%, which is the last bracket. Okay, so again, you need to check which category will you fall before you can calculate what? The tax. And again, you must be careful. This table is for taxable income. It means before you can come and use this table, you need to make sure that you get your taxable income. And again, there's a formula for calculating what? The taxable income. So taxable income is like, for example, you will take your gross income and you minus any deductible items, and thereafter you'll find taxable income. Okay. Now, there's something called tax rebates. Tax rebate reduces the amount of tax to be paid to SARS. In a way, it's like a discount granted by SARS to the taxpayer. This means that it depends on the age. The first rebate, as you can see here, is called primary rebate. Obviously, primary means first. Everyone qualifies for primary rebate, irrespective of your age. Okay, so meaning you and I, we qualify for what? For primary rebates. Currently is 14,220. But if you are if you are 65 years and older, you will qualify for 2 rebates, meaning primary and secondary, meaning you're going to enjoy the benefits of having what? 2 rebates. But if you are 75 years and older, you will qualify for 3 rebates. As I said, the first rebate, everyone qualifies. The second one, it depends on the age, 65 and older. if you are 75 and older, you get 3 rebates. So in other words, you will end up paying less tax. Now we've got what we call the tax threshold. If you are under the age of 65 and you are earning 79,000 per annum, you are totally exempt from paying tax. You won't pay tax at all. But if you are 65 years and older and you are earning 122,300 per annum, you are not going to be taxed at all. In other words, anything up to 122,300 won't be taxed. But if you are 75 years and older, it means as long as you are earning 136,750 per annum or less, you won't pay tax. So we call them tax thresholds. Okay. Now let's talk about the UIF. I think we are familiar with the UIF. Even from our previous units, it mentioned the fact that you need to contribute UIF. Currently, 1% from the employee, 1% from the employer. In the fund, the contribution will end up being what? 2%. And again, even now, because of the current developments in the country and the world as a whole, you know that our government is using the UIF as a relief to the workers. Remember, UIS is an insurance. In other words, we insure for an unforeseen circumstances. Currently in South Africa, what is happening was not expected. So an insurance fund, that's why it's being used to relieve workers because they are unemployed for now. It's unexpected. But just know that if you are earning 20,000, don't expect to be paid 20,000 at the end of the month. It will be way less than 20,000. So there are calculations which will be used to pay those workers. But currently, it means we are currently paying the UIF. Like if you are still going to be paid at the end of the month, they will deduct UIF from your salary. Just know that the maximum per month is 14,872. This 14,000 doesn't mean that this is the UIF that you're going to contribute. It's the salary on which UIF will be calculated on. I remember very well we did touch on this before. So let's say, for example, you earned you have got a salary of 15,000 per month. 1% won't be based on 15,000 because it exceeds 14,872. So anything above 14,872 won't be used to calculate that 1%. 14,000 will be used instead. But if the salary, for example, is 10,000, is then that you're going to use 1% on that 10,000. But if it is per annum, the maximum is how much? Is 178,464. And remember, the benefit that you can get from the UIF is 2238 days benefits in any period of 4 years if unemployed, or a maximum of 121 days for maternity if we still have sufficient funds to cover the maternity. Okay, so just basic understanding around UIF. We have the pension funds and the provident funds. They're similar in nature. Both are for retirement, but the way to pay them out is different. When it comes to the pension fund, they don't normally give you the lump sum as a payout. They normally give you 1/3 of whatever amount of money you have. Let's say, for example, you are eligible to 10 million. They will give you 1/3 of 10 million as a lump sum, and the remainder, which is 2/3, will be invested on your behalf, and we will call that annuity. In other words, you will get maybe a monthly payment of 10,000 per month, maybe for 50 years or maybe for life. Okay, so pension is a little bit different. But when it comes to the provident fund, can be paid to you as a lump sum. You see, so that's why the difference in arrangement when it comes to lump sum must be noted. Medical aids, sometimes some employers encourage you to take a medical aid. Maybe they can say you must take medical aid coming from a specific provider. So sometimes you can find that employers meet you halfway. If you contribute 100 rand, they also contribute 100 rand. Sometimes they don't contribute at all. You're the only one who's contributing. So it's all about the agreement. Sometimes you contribute 100 Rand, they contribute 50 Rand. So in your fine, it's going to be 150. So again, this depends on the agreement between the employer and the employee. Let's look at this example. The following information is for a guy by the name of Lockdown. Lockdown is a 40-year-old, and Lockdown has the following information which took place during the month of April. Lockdown received a basic salary of 40,000 and also a housing allowance of 4,000. Remember, in the eyes of the laws from SARS, this housing allowance is also regarded as a remuneration. So it means at the end of the day, it's like he got 44,000, and that will have a tax implications when it comes to the calculation of tax. He paid the following. He paid 7.5 of his basic to a retirement fund. Let's call this retirement fund like a pension fund. And his employer contributed how much? 7.5%. He also paid 1,770 for medical aid. His employer contributed what? 50% of that amount. In the fund, 2% was paid to UIF, meaning 1% from the employee and 1% from the employer. Let me explain this, or let me state this. When they are asking you to calculate the tax to be paid by the employee, or maybe the net salary, which is the take-home pay of the employee, please only consider the payments which have been paid by the employee. Do not regard the payments from the employer. So, calculation of tax, only use the employee's activities, and then do not include any employer's contributions. Okay. They will always give you the table like this. You don't have to memorize the table. The table will be given to you in the exam. And even the rebates will also be given to you, as long as you know how to use them. Okay. The requirements, they want you to calculate the payee for Lockdown for the month of April. Remember, they're only asking for what? For payee. They're not asking for the net salary. But remember, for you to calculate the pay as you earn, you will have to go and check the text tables. But if I can go back to the text tables, can you see the text tables? They say taxable income. So meaning we can only be able to use the text table if we can find the taxable income. So it means we must first find what? The taxable income. What is the taxable income? The taxable income will be the gross salary less any deductible expenses. Let's go back to the information. Can you see Mr. Lockdown earned a basic salary of 40,000? And he also earned housing allowance of 4,000. Meaning all in all, he earned 44,000 during the month of April. Okay? So if you can check where they say he paid, this means on that information, we must check which information is deductible for income tax purposes. Only the retirement fund will be deducted. The medical aid and the UIF, according to the new developments, will be dealt with thereafter. So the only deductible expense will be the retirement fund. Okay, let me go back to the question. Firstly, we need to find the taxable income. Like I gave you the formula there. We're gonna take the basic plus the housing allowance minus the pension. So if you remember, this is the calculation. Remember, the basic was 40,000 and then 4,000 was the housing allowance. We must deduct 7.5% of 40,000. Why do we only select 40,000? Because the information said 7.5% of the basic. So the basic was 40. That's why you only deduct 7.5% of 40,000. And how much will be the taxable income? It's going to be 41,000. Okay, so make sure that you remember how to do this. And remember, this is the taxable income which is per month. Remember, I told you about the tax table. The tax tables are annual. So I cannot go to the table with 41,000 and try to calculate the tax. I must first convert this 1,000 to an annual amount of money. So can you see now? I'm going to say 41,000 times 12, and I'll get how much? 492,000. So this 492,000 is the one that I'm going to use to calculate what? Tax. So now I'm going to go back to the tax table and check where does this 492,000 fall. Let me go back. And let's see if we can check the table here. 492,000 falls within the fourth category. 1, 2, 3, 4. It falls between 423,311 and 555,600. This means that Mr. Lockdown is going to pay 100,263 plus additional 36% of the taxable income above 423. Can you see? This 423 is going to be used to calculate. So I'm going to show you how to use this. But what I know at the moment, he's going to pay 100,263 plus 36% of the amount above 423. What do we mean by saying amount 423, above 423? It means we're going to look at the annual amount that he has, and we're going to minus what? 423,300. Let's go back to the question, to the answer. So we are here already. Now, on this tax table, remember, we found this is the bracket where 492,000 falls. It falls within that bracket. And according to that bracket, they said it's going to pay how much? 100,263, but plus 36% of the amount above 423,300. Can you see how do I find that amount above? I take my annual of 492 and I minus 423,300, and I get how much? 24,732. So it means all in all, the tax that is going to be paid is how much? 100,263 plus 24,732, and all in all is 124,995. Okay, so it's not that difficult as long as you follow the rules. That's why I use this table so that I can have everything in order. Now, if you check here, this amount is 124, which is annual. But remember, we talked about the rebates. Mr. Lockdown is a 40-year-old man. It means because he's less than 65, he can only enjoy a rebate, which is the primary rebate. And if you remember, the primary rebate was how much? Was 14,220. So it's like he's going to be given discount of 14,220 by SARS. So what he will owe SARS, which is the tax liability, will be how much? 110,770. How did I find that? I said 124,995 less 14,220, and I got an annual tax liability of 110,775. This is the annual figure. But remember, the question said a monthly figure. So we only need for 1 month. So I need to calculate only for 1 month. How will I calculate? I'll take that amount of 110,775 and I divide by 12. And how much will be the tax payable during the month of April? It's going to be 9,231 rands and 25 cents. So this is the amount that is going to be paid by Lockdown. Please go through this question, guys, and then so that you can be able to answer the future questions, and also go through your manual, guys. In the next lecture, not this coming lecture, but next video, I'm going to show you how to calculate the net salary. So here I was just showing you how to calculate what? Pay as you earn. Thank you very much, guys, and I hope all is well, and then have a good night. Thank you very much, guys.